A pleasant day to everyone. In today's video, we will talk about the Chapter 18 of the book Intermediate Accounting of Zeus Vernon B. Milan, the Government Grants. Before we proceed to the assigned problems, let us first have a brief background about this topic.
What is a government grant? Government grants are assistance received from the government in the form of transfers of resources in exchange for compliance with certain conditions. These are also called subsidies, subventions, or premiums. Examples of this are receipt of cash, land, or other non-cash assets, receipt of financial aid in case of loss from a calamity, forgiveness of an existing loan from the government, and benefit of a government loan with below market rate of interest. So the related standard of this topic or chapter is past 20, which is the accounting for government grants and disclosure of government assistance. It was stated that only government assistance that meet the asset recognition criteria are recognized as government grants. It excludes government assistance whose value cannot be reasonably measured or cannot be distinguished from the entity's normal trading transactions.
We are now done with a brief introduction about what government grant is. Now we have here 4 problems indicating an entity receiving a grant. So we are required to prepare journal entries for the first year to record each independent government grant we receive. The entity receive. So first is an entity received a grant of 30 million pesos from the British government in order to defray safety and environmental costs within the area where the entity is located. The safety and environmental costs are expected to be incurred over 4 years respectively, 2 million pesos, 4 million pesos, 6 million pesos, and 8 million pesos. So the problem involves a monetary grant related to income. This type of grant is measured at the amount of cash received or the fair value of the amount received. There are two ways of presentation of grants, the gross and net presentation, but when the problem is silent, it is assumed that it uses the gross presentation. So for this problem and the subsequent problem, we will use the gross presentation since the problems are all silent. So the givens are the cash received for the grant, 30 million pesos, and the cost incurred for the 4 years, which totaled into 20 million pesos. The first entry or the initial entry is the receipt of the grant. So the entity received a cash of 30 million pesos as a grant for safety and environmental costs. We will debit cash with that amount and credit deferred income from government grant with the same amount. It's still deferred income since there's still no expense incurred, thus we will not record an income too. Second entry or the year-end entry is when there's an expense incurred. We're only recording the first year, so we'll debit the expected cost for safety and environmental to be incurred in the first year only, which is 2 million pesos. To record this, we will debit safety and environmental expense for 2 million pesos and credit cash with the same amount. Since we already incurred an expense, we should record an income from the grant we received. We will record the income by debiting the deferred income from government grant, 3 million pesos, and credit income from government grant with the same amount. The income from government grant, 3 million pesos here, is computed by multiplying the grant we received, which is 30 million pesos, and the total cost incurred for the first year, which is 2 million pesos, divided by the total estimated cost, which is 20 million pesos. We are now done with the first problem, having this as its journal entries for the first year. We're now going to problem number 2, which states that an entity received a grant of 40 million pesos from the American government for the construction of laboratory and research facility with an estimated cost of 50 million pesos and a useful life of 20 years. So this problem involves a monetary grant related to depreciable asset. It's depreciable asset since the research facility building can be depreciated. So it's a monetary grant, thus we will record the grant by the cash the entity received, just like in the first problem. So the givens are the grant we received, 40 million pesos, and the estimated cost of the research facility, 50 million pesos, its useful life, 20 years. The first entry or the initial entry is the receipt of the grant. We will debit cash of 40 million pesos and credit deferred income from government grant of the same amount to recognize the grant received. Second entry is the recording of incurred cost of the entity for the construction of the building. The building is 50 million pesos, so we will debit building 50 million pesos and credit cash with the same amount. Since there's an expense incurred, we will record income from the grant we receive. For a monetary grant related to depreciable asset, the income from government grant is recognized in the same way with the recognition of depreciation expense. So our year-end entry is the recognition of depreciation expense and the income from government grant. The depreciation is recorded as debit depreciation expense of 2,500,000 pesos and credit accumulated depreciation with the same amount. The depreciation here, 2,500,000 pesos, is computed as the cost of the building, which is 50 million pesos, divided by its useful life, which is 20 years, totaled into 2,500,000 pesos. So the next entry is the income we received from the grant. So the recognition of the income from the grant is debit deferred income from government grant, 2 million pesos, and credit income from government grant of 2 million pesos. The 2 million pesos here, the income we receive, is computed as the same way the depreciation expense is computed, which is the grant we receive, which is 40 million pesos, divided by the useful life of the building, 20 years, totaled 2 million pesos. So the journal entries for the problem 2 for first year is this.
Problem number 3. An entity is granted a large tract of land in Cordillera by the Philippine government. The fair value of the land is 50 million pesos. The grant requires that the entity shall construct a factory and employ only personnel residing in the Cordillera region. The cost of the factory is 80 million pesos with a useful life of 25 years. In this case, it is a grant related to assets whose primary condition is that the recipient entity should construct a factory. So the entity received a land from the Philippine government. That is why we debit land. Remember that land is a non-monetary grant. That is why it is measured at the fair value. Now in this problem, the fair value of the land is worth 50 million pesos. So we debit land, we credit deferred grant income, and so we have 50 million pesos total amount. Now, since the entity is required to construct a factory, therefore, we also record it. We need to record it. So we debit building and credit cash. So the cost of the factory is worth 80 million pesos. Now we have here the depreciation expense, accumulated depreciation, deferred grant income, and grant income. So since the grant relates to a non-depreciable asset, which is the land, income from the government grant will be recognized as the related building is depreciated. So furthermore, income is recognized on the same basis as the related depreciation expense. So we have here accumulated depreciation. The worth or the cost of the building is 80 million divided by the useful life, which is 25. So the depreciation expense and accumulated depreciation is worth 3,200,000. Now, as I've said, income is recognized on the same basis as the related depreciation expense. So the grant income is the fair value of the land, which is 50 million pesos, divided by the useful life, which is 25. So our deferred grant income and grant income is 2 million pesos.
And now let's proceed to problem number 4. An entity received a grant of 10 million from the Australian government to compensate for massive losses incurred because of a recent earthquake. So obviously, for this problem, the grant received by the entity is a compensation for losses incurred or as a financial aid. So note that past 20 uses the income approach. Thus, upon recording or writing its journal entry, we will debit cash of 10 million, then a credit of the same amount as the income from government grant. So the grant was actually recognized immediately as income because it was received as compensation for losses already incurred. If the amount of loss was indicated, it will be accounted for separately. But for this problem in number 4, the journal entries for the first year is this.
That ends our discussion about government grants. We hope that you have learned something from us. Thank you so much and keep safe.